estate reality show with E.J. Hawkins and Cortez M. Johnson. Only on LA Talk Radio.
Thank you for tuning in to the Real Estate Reality Show. I am your host, E.J. Hawkins, and my co-host, Mr. Cortez Johnson. How are you doing today, Mr. Johnson?
Good and yourself, sir?
I'm doing pretty good. So I want to wish everyone I hope that everyone had a happy, good July 4th, Independence Day. So I literally just stepped back into town. How was your weekend, Mr. Johnson?
It was great. Yesterday, spent time with the family at Magic Mountain, of all places.
Okay.
And went on some rides and some funnel cakes.
Okay.
And saw some fireworks.
Okay, so now you know you got to get back in the gym so you can trim the fat to see the muscle.
Exactly.
Yeah, I caught myself going to a wedding that was canceled at the last minute.
It was canceled.
What happened? Canceled. I don't know, but that's what happens when you have your hometown weddings with your peoples. So
it was canceled. So somebody didn't show up, huh?
Somebody didn't show up. Well, a bunch of people didn't show up. Let's put it that way. So we had to go ahead and cancel the thing. But let's get into today's show. So last week we talked about how to qualify for a loan, what documents are needed, how the process works, and all that good stuff. So this week we're going to talk a little bit more about FHA, VA, and a couple of special programs out there that you could take advantage of. So most people hear the name thrown around, FHA. What does that mean? What is FHA? What is an FHA loan, Mr. Johnson?
So an FHA loan is a Federal Housing Administration loan, which is insured by the United States government. Got it.
So I know most people assume that, if you qualify for a FHA loan, that you must be a low to moderate income individual. But is that the case?
No.
Okay. So what are the components of an FHA loan? How do you qualify? What is the down payment? Can you elaborate a little bit more on that?
Okay, good question. So how to qualify, basically we would take your loan application and your documents, and then we would run the Fannie Mae DU to see how much you would qualify for. But with FHA, the down payment is only 3.5% of the purchase price.
Right. Compared to conventional, which is what, 5%? 10%.
Right.
So 3.5%. Now, what would be the advantage of someone going FHA as opposed to conventional?
Good question. Excellent question. The advantage is that you get into the property easier as far as a lower down payment, and the guidelines are a little bit more flexible than conventional.
Got it. So flexible guidelines. Now, what about, I hear this term thrown around all the time, debt to income ratio and this and that. So meaning the debt to income ratio is you can have a higher debt.
Yes.
As opposed to conventional, you must have lower debt compared to your income.
Yes, exactly. So with my lenders, we can go up to 55% of your gross income to help qualify for the home loan versus conventional is about 43%. It's a huge difference.
Wow. So obviously with the lower debt to income ratio, for someone being able to qualify for FHA as opposed to conventional, they can qualify for a lot more money.
Yes.
Got it. So do you have to have a specific credit score to qualify for FHA? Is it more lenient than going conventional?
Okay, so with FHA, technically they don't have a credit score requirement, but the banks have a credit score requirement.
Got it.
So with my banks, the credit score requirement is a 600.
So you just have to be breathing and have just breathing and a few trade lines.
Exactly.
Okay.
With no judgments.
With no judgments.
Yes.
Okay. You know what? Now, we talked about this a little bit last week in terms of short sales and foreclosures. Now, can someone qualify for an FHA loan with a short sale or foreclosure previously on their credit?
They sure can, as long as that short sale or foreclosure was completed at least 3 years ago.
Got it. Okay. So 3.5% down payment, 55% debt to income ratio. What are about closing costs? Because each loan has closing costs associated with it. What makes you doing an FHA loan compared to someone else?
Okay, it's a huge, enormous difference.
Okay.
Gigantic difference.
Talk to me.
Okay, so what I do that's special now, keep in mind that through the years, I worked for several companies, some big banks and middle-sized lenders, and even a nonprofit. So what I did, I tried to put together my own program based on my history, my work history that I seen at the big bank, the middle lender, mid-sized lender, and the nonprofit that I worked for.
Got it.
So what I did, I created my own system where I pay the closing cost.
Okay, so wait a minute. You pay the closing costs.
Yes.
Now, typically closing costs can range anywhere from 2 to almost 3% of
Yes.
the purchase price, correct?
Yes.
So on a let's hypothetically on a $200,000 home,
Yes.
you're talking about closing costs of maybe $600 to $6,500.
Yes.
So you're talking about you can pay all the
yes.
closing costs.
To make things easier for the buyer,
Right.
the seller, and the realtors, I pay the closing costs to make the deal easier.
So how does that work, and what is what is entailed in the closing costs?
Okay, so the closing costs are escrow fees, title fees, prepaid interest, prepaid property taxes, homeowners insurance, the notary fee.
Right.
These are fees that they all add up to get the deal done.
Right.
I can even pay for a termite report and termite repairs.
Really?
As well. Yes.
Really? Okay.
Yes.
So here's the magic question. Now, I've seen other lenders pay the closing costs. However, does it increase the loan balance, or does it increase the interest rate for the borrower? Because if you're increasing the interest rate or you're increasing the loan amount, then it doesn't become that advantageous sometimes. So how does that work? How do you do that?
I get that question all the time. People always say, Cortez, this has got to be a scam. You're doing something. I don't believe it.
Right.
I even had a realtor tell me before, this realtor referred me a client.
Okay.
I told him about my program, got into escrow. We're in escrow. I said, hey, Mr. Realtor, I'm going to pay these closing costs, which was about $8,000 or $9,000. He said, Cortez, I don't believe you. I said, wait a minute. We're in escrow. You referred me to your client, and you don't believe that this is going to happen. I don't believe it.
Right.
We went the whole, 30, 45 days. I don't believe it. I don't believe it. No offense, I don't believe it.
Right.
We got down to the end, and we closed escrow, and his client only brought in the down payment. That's it.
That was it.
That was it.
Nothing else.
Nothing else. Now, the only closing cost that the buyer has to pay for that I cannot pay for is the home inspection and the $475 appraisal fee.
Got it. Well, and those typically aren't necessarily included in the closing cost
Right,
anyway.
they're not.
Okay, so here's what I'm trying to understand. How is it that you're able to do that, but the big boys like the Bank of Americas, the Wells Fargos, why can't they do that?
Good question. So I don't have commercials, a suite at the Staples Center. I don't have bus benches.
Okay.
I don't have a fancy office with free coffee. But I'm able to do it because I am a smaller lender.
Right.
And we have control over our pricing.
Okay. So with that being said, what kind of rate?
Okay, good question.
Can I get a competitive rate with this FHA loan and you paying my closing costs?
Yes, you can. So since I am not a bigger lender, I'm what's called a mortgage broker, mortgage banker.
Right.
So you have the big banks, the mid-sized banks, and then the brokers and correspondent lenders. So I'm
Right.
a correspondent lender. And so my pricing is more competitive because I don't have all these ads and this fluff in the interest rate.
Got it. Okay. Makes sense. So what is the loan limit for FHA?
So
'cause I know it's increased within the past couple of years.
Right. So with FHA in Los Angeles County, a single family residence is $625,500.
625, 500.
Yes.
It's a lot of places you can buy.
A lot of places you can
at
buy.
625.
Yes, and now keep in mind that that's called a high balance FHA loan.
Really?
Yeah, so anything over 417,
Okay.
anything above 417, that's called high balance.
Okay.
So what does that mean?
Right.
The interest rate might be 0.25 higher. That's it.
Okay.
The pricing is a little higher for a high balance.
Okay. But they still are able to take advantage of all the other.
Oh, yes. Definitely.
They can get the closing costs paid.
So I don't know if you remember, but we had a deal off of Venice Boulevard in Los Angeles, the 4-unit building.
Venice Boulevard.
It was 4 units.
Got it. Okay. All right.
So with that transaction, what was the purchase price?
Gosh, I'm having amnesia.
Okay, me too.
Okay.
So it was like 800,000 or 900,000 or something like that, or 700.
It was I think it was 840.
Okay, 840.
Right.
So with that transaction, that particular buyer said, "You know what, Cortez? I want you to pay my closing costs and my mortgage insurance premium."
Right.
I said, "Oh, I've never done that before." And he said, "Oh, you can do it."
he told you what you can do.
He told me what I can do. I said, "Really?" So now the mortgage insurance premium is a one-time fee from FHA,
Right.
not from Cortez.
Okay.
Added to the base loan amount. This is a one-time fee that FHA does on every FHA loan. So this particular buyer didn't want that fee. He said, "Cortez, you pay it. I'm going to refinance this property in about 6 months into a conventional loan. I'm using FHA just to get in."
Wow, really?
Well, yeah. So he held that. Now I looked him up. I believe he did refinance. He didn't. He went with his other lender. I don't know why he didn't call me, but basically with that particular FHA transaction,
Right.
the credit was about $25,000.
Ah, okay, yeah. I remember vividly now. Okay, right. Yeah, that was he was pretty shocked at that deal that you gave him. Yeah,
Right.
I remember. So you just touched on another point. So with an FHA loan, in that particular situation, my client, he bought a 4-unit building.
Right.
You can buy anywhere between 1 to 4 units with this FHA loan.
Yes.
Got it. Okay. Now, the number that you threw out before, in terms, I think you said 625.
That was for single family.
That's a single family.
Right.
But for a 2-unit, 3-unit, 4-unit building, that number is what now?
It's higher.
It's higher.
So, for an example, for a 4-unit, I believe it's 1.3 million.
Really?
Yes. Now you asked a question, but that I didn't answer before.
Okay.
You said, "Do I have to raise the interest rate?"
Right.
So the answer is, my rates are like going to Costco or Walmart
Okay.
rather than going to an expensive place to buy food.
As opposed to going to Whole Foods.
Yes. Yes.
Okay.
So I can give you the same product
Right.
for less. And so my rates are very, very, very competitive, and I can give you the same rate or better as another lender with the credit.
Really?
Yes. And if the person does not want my credit, guess what happens?
What?
They get an even lower interest rate.
So you take that money and buy down the interest rate with it.
Well, I don't buy it down, but the higher the rate, the higher the credit. Yes. But my rate, let's say you have a bank and then myself, and they both have 4.2.
Got it.
They have a 4.2, I have a 4.2, right? Their 4.2, they might charge you 1 point. My 4.2 will give you $8,000 credit. You follow me?
Right.
Now, if you don't need my $8,000 credit, with my 4.2. I can possibly give you a 3.5, and you won't find that rate with other banks.
So you're saying you can't be beat?
I cannot be beat. Let me tell you, FHA, I cannot be beat. Period.
I hear you. So, okay, so that is good. So now here is the problem that I run into with a lot of FHA borrowers is that not many properties qualify for FHA. And now, in some instances, that is a myth, especially with a lot of single families. Condos, it is more prevalent.
Yes.
Now, for a condo in particular, someone has an FHA, you've approved them for an FHA loan. Is there a different requirement compared to a buying with a single family? That building has to be FHA approved, right?
Yes, it does.
So if it's not FHA approved, then they cannot purchase that home, that condo.
No.
Got it.
But to touch base on, but you just mentioned the property, the condition of it.
Right.
So it is a myth that some realtors think FHA is going to be harder than conventional.
Right.
That's not true.
Oh, I know it's not true. We did a deal not too long ago with a client in Chatsworth, and the realtor he had a VA loan.
Right.
The realtors, as soon as he saw the offer, he was very hesitant to accept it. Most people assume that, oh, if I have an FHA offer or a VA offer, then there's going to be all these hoops and things that I have to jump through. However, we closed that loan in 30 days.
Yes, because we did. And see, with the FHA loan, the VA loan, the conventional loan, the appraiser from the bank is going to go out and appraise the property, but also they look for safety and hazard.
Right.
Whether it's FHA, VA, or conventional.
Right.
So people think that FHA is going to have more requirements. For an example, there must be smoke detectors and 1 carbon monoxide in the property.
Right.
That's for FHA and conventional.
That's standard across the board now.
It's standard across the board.
Right.
You know, so it's a matter of educating sellers and realtors the difference between FHA and conventional.
Got it. So now I touched on it a little bit before. So the condition of the property.
Right.
So FHA now has a program, and I know a lot of people don't know about this program, but the FHA 203K loan.
Yes.
So find the property, needs work done to it to bring it into a livable condition.
Yes.
Tell me about the FHA 203K.
Okay, so I have one in escrow right now, and it's called West Athens, part of Los Angeles, 90047.
I know exactly what you're talking about.
So this home is a 2,000 square foot, 4-bedroom home.
Okay.
Right? And it's a dated, and it needs work.
Okay.
So my buyer found this home. He's actually a realtor, and he wants to change the flooring, kitchen cabinets, appliances, paint, just the general cosmetics. So he said, Cortez, can we do an FHA 203K? I said, we sure can.
Right.
So it's called an FHA 203K Streamline. So how it works, you can get up to $35,000 for the repairs.
So that's the max, $35,000
on the Streamline.
On the Streamline.
Yes.
Okay. Now, what about an FHA? What if they're trying to purchase the home?
Oh yeah. Oh, they call it a Streamline for some reason.
Oh, really?
Yes. So there is an FHA Streamline refinance.
Okay.
And then there's the FHA 203K Streamline.
Got it. Okay. But the max amount of monies they have available to make any needed changes to the property is $35,000.
Yes.
So it can't be acting as if they're an investor or some flipper.
No.
Buying something with, $50,000-$60,000 worth of work.
Oh no, these FHA loans are for owner occupants. Must be owner occupied.
Okay, so it's mainly for making updates. The
Right.
kitchen is okay, but you want to update the countertops, granite countertops, nice flooring, cabinets, stuff like that.
Yes.
Okay. Okay, I got you. So what you just mentioned this before. What is an FHA streamline refinance, and how does that?
Good question. So with the streamline, that's a refinance. So that's when you already have an FHA loan,
Okay.
and maybe you have a 4.5 interest rate, and you want to streamline down to a 3.8 interest rate. You want to lower your rate to lower your payment.
Right.
And so with the streamline, we don't need any documents. We don't verify your. We do call your job to make sure you're still working.
Okay.
But it's an easy refinance to lower your payment and lower your interest rate.
Got it.
Yeah.
Got it. Okay.
It's pretty simple. It's a real easy loan.
So also, what I wanted to ask you in regards to FHA, you can receive a gift.
Yes.
How does that work?
Okay. So, as you know, I went to college right here at CSUN, right here in the Valley.
Yes, good old Cal State Northridge.
Yes, that's the good old days.
Right.
And one of my friends from Cal State Northridge said, Cortez, I want to buy a house. I said, really? So he wanted to buy a house in Rancho Cucamonga. He said, Cortez, I have a job. My wife has a job, but we don't have any money. I said, that's normal. And so basically, his mother-in-law gave him the down payment for the 3.5%.
Right.
So literally, he received a gift from his mother-in-law of the 3.5% down. So his mother-in-law paid the 3.5% down.
Okay.
I paid the closing cost. And guess what he had to pay for? You guessed it.
What? Nothing. The appraisal?
The appraisal and home inspection.
That was it.
That was it.
Man, if you can't pay for the inspection and the home appraisal, then what can you pay for?
I don't know. But in his situation, he had the income to make a monthly payment.
He just didn't have the down payment saved.
Right. So his mother-in-law gave him that. I gave him the lender credit. It's called lender credit for the closing costs.
Okay.
And the rest is history.
So what did he have to show or prove in the beginning to show that he had this gift money
Good
available?
question. So we have a form in our computer system. It's called a gift letter.
Okay.
And you just can't write a letter. We have to give you the letter.
So he couldn't have a letter that said, Uncle Tom is giving me $50,000 to put down on his house.
No.
Okay.
So we gave him the gift letter, filled out. It's real easy.
Mm-hmm.
Signed by him and his wife and the mother-in-law with her number. And we needed a copy. Now, FHA they're changing the rules all the time.
Right.
It's called mortgagee letters. I don't know all the rules, but my lender does. So at that time, we just needed a copy of the cashier's check.
Okay.
From the mother-in-law. Now we need the cashier's check and a bank statement from the giftor.
Got it.
Right? But all these things change all the time, but it's pretty easy.
Right. And I can attest to the mortgagee letters when I worked corporate at one of these big banks out here. Trust me, the banks don't even know half of the changes that come through. It's kind of like, whenever it happens, you look at it and,
you can't keep up with, you cannot keep up with all those rules.
You can't. It's just too much to go over. But one of the things I wanted to touch on was that we talked about it before, that most people assume that with an FHA loan, it is a myth, people. It is a myth that if you have an FHA loan, that you are a low to moderate income buyer, or you can only purchase in certain areas, or you can only purchase a certain type of home. That is not true at all.
No.
The only time that comes into play is if you're buying a condo.
Right.
The condo community or the HOA must be FHA approved.
Yes.
Unfortunately, in Los Angeles County, those buildings are far and few between. However, you can still find something to buy. That is not a problem.
Right.
So, you were going to say something, Cortez?
You can buy a house in Reseda to Gardena to Rancho Cucamonga to Culver City, as long as it's under $625,500.
Got it. Okay. Yeah, because you sure couldn't buy. Oh,
Oh, now that 625,500 is for LA County.
Got it.
And Orange County.
Okay. So what about San Bernardino?
I knew you were going to ask that.
Okay.
I believe San Bernardino is 355. It's a lower.
Wait a minute. It goes from 6
Yes.
to 355?
Yes.
Good Lord.
Yes, because see, LA County and Orange County are considered like higher priced areas.
Right. Okay. Well, yeah, you can definitely buy. And yeah, me and my partner, we sold a property in San Bernardino, and it was in the $200,000 range.
Yeah. And see, people can simply go to Google, and if they want to know if they live in San Bernardino, Riverside, or Ventura, San Diego, or Kern County, they can go to Google and type in where are the loan limits in Kern County.
Right, and it'll give them
pop
the loan
up.
limit.
Oh yeah.
Okay. And then just because those loan limits are there, you still have to qualify at that limit to even
with your income.
Right. Got it. Okay. So that was good in terms of the FHA. So tell me a little bit more about VA loans, because again, that is a myth with individuals. Like I said, I did a transaction. Actually, we did a transaction where the client had a VA loan.
Right.
The agent was so hesitant to accept the offer.
Nervous.
He was nervous.
Right. He's down the street too.
Down the street, right? This guy does hundreds of deals.
Yes, he's famous.
When he saw this VA loan, he almost ran away. Until we explained it to him how it works.
And I believe with your negotiation, he trusted you.
Oh, yes, with my negotiation.
He trusted you, and he accepted our transaction.
Right. But at the end of the day, he trusted me, but he also trusted that you knew the process in terms of how it works, and we debunked a lot of the myths.
Yes.
I think the biggest one is the appraiser, that the appraiser is going to go out there like he's Inspector Gadget.
Right.
And is going to go through it with a fine-tooth comb and mark this and that, and the property won't qualify.
Right. Because he told me, VA appraisers are more conservative than conventional. No, an appraiser is an appraiser. VA, conventional, FHA, the appraiser's job is to give their opinion about the value of the property, period.
Right. That's it. So what is the difference between a VA loan and an FHA loan?
Okay, with a VA loan, you must be a veteran.
So, okay.
That means that you were in the Army, the Navy, you were in some type of...
I was in ROTC back in high school.
ROTC. I don't think that counts.
Okay. It was for a short time being.
Right.
Okay.
And so this is actually the best loan, in my opinion, in the industry.
Really?
Yes.
Why is that?
I love it. Number one, it's 0 down payment.
0 down.
0 down.
No money out of pocket.
No money out of pocket. Compared to FHA,
it's 3.5%.
3.5. This is 0 down.
Got it.
This is for veterans only.
Okay.
Number two, the VA loans do not have mortgage insurance in the payment.
Oh my gosh, that is such a big plus, because those mortgage insurance payments, they can be a few $100s added to the loan amount.
Yes,
to your monthly payment.
Right.
Per se. Wow. Okay, so no mortgage insurance.
No more. That's why I really love this loan. No mortgage insurance.
Okay. So what up? Can you pay the closing costs
on the VA loan? I cannot be beat.
What?
Again.
So you pay all the closing costs on the VA loan?
Let me tell you this. Yes, I pay all the closing costs, and a lot of sellers, including the realtor that we were dealing with, he was questioning the appraisal, and there's something called non-allowables.
Right.
That the seller has to pay for the buyer.
Right.
So with my program, I pay it.
You pay the non-allowables.
I pay the non-allowables.
How are you able to pay non-allowables that are considered non-allowables?
Well, they're not allowable to the they're not allowable to the buyer.
Got it.
But not to me. So with that lender credit that I credit people's closing costs,
right?
I pay. It's all together. So non-allowables are escrow and title.
So essentially, someone who qualifies for a VA loan, someone who's in the military armed forces,
yes,
can walk into a situation where they don't have $1 in the bank, but they may have good income, may have $100 saved,
Right.
and can buy a house.
Yes. So now the answer is yes.
Okay.
But most sellers and realtors want the veteran to still bring in a deposit
Got it. Right.
into escrow.
The earnest money deposit.
Earnest money deposit. So let's just say that the deposit is $5,000. The veteran, Mr. Jones, brings in $5,000 into escrow.
Okay.
And that $5,000 is in escrow. Guess what happens 99% of the time when escrow closes with the $5,000?
Goes towards the loan, right? No?
You guessed it. They get a refund.
They get a refund.
Yes.
So they get the money back.
Yes. Because I paid all the fees.
Right.
So they get a refund check of their deposit. It might.
Don't say refund check because because you know how people are. They hear refund.
Right. Right.
They take that money and go spend it. Do not spend if you have an earnest money deposit and you put it in escrow and buy with the VA loan. Don't take that money and go spend it. Put it in the savings.
Right.
You know, it could be part of your emergency fund to pay your mortgage payment later on down the line.
Right.
So, go ahead, Mr. Johnson.
Oh, no. So basically, since I have this large credit for the veteran and they have their deposit in escrow, when escrow closes, the escrow officer will cut that check for that deposit.
Okay. So, what are the qualifications for a VA loan? Is it the same in terms of a FHA loan? Because I know you mentioned for a FHA loan, it is what 40? Was it 55%? 55% debt to income ratio. Is it the same for a VA?
Okay, that's an excellent question.
Okay.
So the reason why I like working how I work is because we have less overlays.
And what are overlays?
That is extra rules that the bank adds to what FHA and VA says. Extra rules, right?
And how is that?
So FHA has rules, VA has rules.
Right.
But then the bank lending the money,
Has
they
their
have
own set of
more
rules.
rules,
Right.
right? So my lenders do have rules, their own rules, but it's very minimum
Okay.
compared to the big banks, right? So for VA, we can go up to 62% debt to income ratio.
Wow.
Yeah, that's unbelievable. Now, I have a friend who works for one of the big banks. I believe his bank, the max is 50% or something like that.
Right.
You know, but I can go up to 62% debt to income ratio with a VA loan.
I mean, that's the difference between a couple hundred to maybe even a few $1,000s of mortgage payment, or our increase in terms of loan amount, right?
Yes, increase of loan amount.
Right.
Right.
Wow. So, I guess my question is, so with a VA loan as compared to an FHA loan, technically you can qualify for more money, right?
Yes.
Now, do they have the same restrictions as a VA loan? Like, for instance, I mentioned that for if you were purchasing a condo or townhome in a community, the building has to be FHA approved.
Right.
It would have to be therefore VA approved as well, also, correct?
Yes.
Okay.
Now, one thing I will say about VA versus FHA with units, which is a duplex, triplex, fourplex,
Right.
the rules are completely different for income property.
Mm-hmm.
I don't remember what it was, but I said, I'm not going to tackle this.
So a VA loan with income property is a completely different situation.
Oh my goodness. There's all these. They want the veteran to have past landlord experience. It's all kinds of rules. So when my favorite lender told me these rules, I said, well, I have 20 lenders. Let me go to lender number 2. And it was the same rules.
Really?
At lender number 2 and lender number 3 and 4 and 5.
So
right?
across the board.
It's across the board. So I I'm not going to tackle a veteran who wants units.
Right.
I'll say, veteran, let's do FHA.
So, wait a minute. So a veteran, he can essentially go FHA as opposed to using his VA loan.
Yes.
So, case in point. So a veteran can purchase their home, their personal residence with a VA loan.
Yes.
Right. And then they have the ability to turn around months later at some point and purchase investment property with an FHA loan.
No, because these products are owner occupants.
Owner occupants. Okay,
Right.
Got it. So, what other requirements does that entails with the VA loan?
So, there's something called a VA eligibility letter.
Okay.
Certificate of eligibility.
Okay.
So, some lenders tell the veteran, call the VA in Atlanta, Georgia, and get your letter.
Oh Lord, you got to call the VA.
Right. So, what my favorite lender does, I just get your name, social, and date of birth, and were you in the Army or Navy or something? And I forgot which service were you in?
Right.
And we get it for you.
Oh, so you guys,
We have a system, we have a portal with the VA where we take the time to get it for you.
oh, okay. So that makes
Right.
a big difference. 'Cause
Oh.
if you had to call the VA,
Oh, yeah, because the veteran is not going to have that certificate. Then they have to call Atlanta to get it. They might get the runaround, so we get that certificate of eligibility for them.
okay. So they get the certificate of eligibility. So they get qualified, they get the certificate of eligibility, and that's it. Then they can go start looking for a home with the VA.
Oh, yeah, but we still have to collect their documents,
Okay.
pay stubs, bank statements, tax returns. We still verify income.
Right.
We still get the loan application, and we still run the Fannie Mae online desktop underwriting system.
Got it.
Now, I have something to tell you.
Talk to me.
I had a client who was a veteran,
Okay.
and we tried to run him with the VA through the Fannie Mae system, right?
Right.
He didn't get approved. But we ran him FHA, he got approved.
Really?
Yes. So this is why it's so important to run the Fannie Mae online system. Now, why didn't he get approved with the VA on the Fannie Mae system? Even though he's a veteran, we had a certificate, he's a veteran, et cetera, et cetera.
Right.
I took the time to call Fannie Mae. Hey, Fannie, this file didn't get approved. What happened? And it was his credit report.
Really?
Yes. The VA
So they are more strict on the credit
is
report.
more strict.
Really? Well,
Yes.
I guess I would believe so, considering you're buying a home with no money down.
Right. So this particular gentleman was a young man, and his credit wasn't that old.
Right.
His credit was like 2 years or 1 year old. And for some reason, the Fannie Mae desktop underwriting system said no.
Wow. Okay. So can you refinance with the VA loan?
Yes. That's called a VA IRRRL. And I don't know what that stands for.
So you can refinance from. So can you go from a FHA
No.
to a V? No, it has to be
VA.
refinance with
Right.
the VA.
And I forgot to mention, with the FHA Streamline refinance
Right.
and the VA IRRRL refinance,
Right.
there's no appraisal.
No appraisal.
There's no appraisal. So I've literally, well, not now because the home values are up, but when the home values were not up, 4, 5, 6 years ago, we can refinance people that were upside down.
Really?
Yes, because there's no appraisal.
Right.
As long as you're at FHA, I guess it's, we're stuck with you, so let's refinance you into a lower payment.
Okay. So now are the rates as competitive with the VA as they are to FHA and conventional? Pretty much the same.
It's pretty much the same.
Okay. So you have your FHA, your VA, and then there are also other programs out there like special loan programs that you can take advantage of, right?
Right. So Personally, I like my program the best.
And what is that?
The regular FHA, standard FHA loan.
Okay.
I pay your closing costs. And the reason why I like my program better is because I can give you a better interest rate.
Okay.
Compared to those special programs. And there's no territory restrictions with my program versus the special programs. And with my program, there's no income limitation.
Really?
With my regular program. So I created my own program by basically I give away money, thousands of dollars.
I need $5,000.
Okay, stay tuned.
Okay, so you're right. So with many of these special programs,
Right.
most cities have their own, especially
do.
the County of Los Angeles.
They do.
Have their own programs. They have income guidelines and
Yes.
limits and restrictions and things of that nature. Your program does not, because it's just a standalone FHA.
It's a standard loan, but I created a system where I'm going to give you money through my loan without those extra hoops.
Right.
So, for an example, special program, there's one called a Sapphire.
Okay.
So the Sapphire, I am doing one right now. Okay. So what the Sapphire is, it's an FHA first mortgage, and then you get a 5% grant, right?
Okay.
And the grant pretty much is going to cover the down payment.
Okay.
And then we have to ask the seller for a closing cost credit.
With the Sapphire loan.
Yeah, so the Sapphire covers the down payment,
Okay.
3.5%, because it's a 5% grant,
Okay.
and it covers the 3.5% down,
Okay.
plus a little bit of closing costs, right?
Got it.
So the buyer can ask the seller for a closing cost credit, or bring in like 1% of their own money.
And see, the problem with that is that, well, here's the thing that I like about your program. It gives you leverage.
Right.
And right now in this market, leverage is everything.
Correct.
So for instance, you have two buyers. Both buyers qualify for $500,000. One buyer is going through your FHA program, getting their closing costs paid. The other is asking for a closing cost credit from the seller.
Right.
If you look at the two scenarios, just from the seller's perspective, the seller is going to go with the offer that is not asking for any closing costs.
Of course.
It's just a no-brainer.
It's a no-brainer.
As compared to someone asking for closing costs. So you ask them for $5,000 and a closing cost
Right.
credit. That you lose all your leverage, and especially in a competitive market such as this.
Right.
Multiple offers on the property. You're asking for closing costs. So it would behoove them not to use your standalone FHA program. Well, everybody has the FHA. The only difference is that they don't have the closing cost credit that you have.
Correct.
So what about I've used this program before, CHDAP.
So now these special programs, I have access to them.
Okay.
So if the person really, like the one I'm doing right now, which is one of my friends,
Okay.
he doesn't have any money,
Okay.
right? And so he has to do
What is up with all these people that have no money trying to buy a house?
it's called budget. Just budget your money
Right.
and don't go shopping.
Don't go shopping.
And don't, eating out, all that stuff.
Right.
But the CHDAP, now that program, I have access to that program, but it goes by how many people are in your home.
Okay.
If you are a single person and you make $50,000,
Okay.
you won't qualify.
You will not.
You make too much money for the CHDAP.
Wait a minute. You make $50,000. That's too much money.
I think it's 40. It's lower than 50,000.
So you need to be scraping the barrel.
Yes. So like people can literally go to Google and type in CHDAP, CHADAP,
Okay.
income limits. It'll pop right up in PDF, and it goes by how many people are in your family and the income. So if you make $100,000 and you're just a single person or even married, you make way too much money for CHDAP unless you have 10 people in your family.
Right.
Or 5 people or 7 people.
Right.
But with my program, you can make $100,000 and still get my credit. There's no income limit.
Okay. So that's the advantage of using you for your FHA program as opposed to utilizing like you said, the Sapphire, CHDAP, or some of these other
right
city programs that they have out there.
Right. There's another one called Cal
HAFA.
Yeah, Cal HAFA, right? So that one is like a second mortgage. It's subordinating second. So subordinating, it's a second mortgage, and I don't believe there's a payment on it.
No, yeah, you don't make any payment on that one.
Right, there's no payment. But now you have to get a realtor and the seller to say, okay, this second mortgage, there's another lender involved, like another entity, state of California, I believe, and they're working on that little loan.
Right.
While the loan officer, like myself, is working on the big loan. So there's 2 different companies working on one client, and so you have to find a seller who's willing to wait 45 days or 60 days with a Cal FHA customer.
Right.
So that's why my program is better, because bring in your 3.5%, and the rest is history.
It's history. So it's a wrap on that part.
It's a wrap.
So FHA, VA, those are pretty much, it sounds like, your niches.
Yeah, you know what? They've become my niches because I cannot be beat.
Right.
So next week or the next couple of weeks, when we talk about conventional,
right,
that's a whole nother ball game.
Okay.
That's where it's really competitive.
Okay.
But for FHA and VA, I can go up against, I challenge. Yes, a buyer, a new first-time home buyer.
Bring it.
To look at my loan and any other lender. You go to your credit union. You can go to your big bank. You can go to your local mortgage broker like me. I challenge you to find someone who has better rates and credits than me.
You don't hear that. Other brokers or mortgage lenders challenging someone else to beat.
Let me tell you this. If I have an FHA or a VA client, I tell them what I do. I explain, answer the questions. I say, hey, I want you to really understand what I'm doing for you. Go get a quote from the big bank and tell me what you get. Go call the broker down the street,
right,
and tell me their quote.
Oh, I had a client do that, and they came back and said to me, they were like, well, they're not going to pay any of my closing costs.
Right.
I said, of course they're not.
Right.
So it's a no-brainer, right?
It's a no-brainer. And so people just have to be educated and find out stuff for themselves sometimes.
Right, right. So, I mean, realistically, one of the things that I like about, utilizing you for FHA and VA is what I mentioned before, leverage, because that is key in this market.
Right.
Because considering it is a seller's market, you have to come into the situation as a buyer with multiple offers. You have to have some sort of leverage, and you can assume that if there are 5 other buyers placing an offer on a property, somebody's going to be asking for closing costs.
Exactly.
If you can limit the amount of requests that you make for closing costs or whatever it may be, and you already have that taken care of, number one, that allows you to get your offer accepted easier. Number two, that gives you more money in your pocket at the end of the transaction, because that's money you don't have to spend on closing costs, right?
Exactly.
It's a no-brainer, people. FHA, VA, LoansByCortez.com, right?
Yes, sir.
So did I get it right? It's Loans by...
Oh, yes.
Your website.
Yes, LoansByCortez.com.
Okay.
www.LoansByCortez.com.
Got it. Okay, so just to recap on that, everyone, FHA, VA loans, LoansByCortez.com. Again, give them a call. Check out the website. Next week, we're going to talk a little bit about, we're going to get into it pretty heavily because I've been getting a lot of more questions and emails and texts about this in regards to short sales, loan modifications. We're going to talk about that and how that all ties into everything that we've talked about before. It's going to be a good show, people.
I can't wait.
We got more stuff coming up. But that ends it for today, everybody. Thank you for tuning in to the Real Estate Reality Show. Again, I am EJ Hawkins, your co-host, along with my other co-host, Mr. Cortez Johnson. Thank you for tuning in.
And good night.
Yes, sir.
You're listening to the Real Estate Reality Show.
Love it.
Yes.
That's
with
a bomb.
EJ Hawkins
You know why?
and Cortez M. Johnson. Only on LA Talk Radio.